Okay, let's take a look at problem 23-2A. During the last week of August, Apache Art's owner approaches the bank for an $80,000 loan to be made on September 2nd and repaid on November 30th with an annual interest of 12% for an interest cost of $2,400. The owner plans to increase the store's inventory by $60,000 during September and needs the loan to pay for inventory acquisitions. The bank's loan officer needs more information about Apache Art's ability to repay the loan, and he asks the owner to forecast the store's November 30th cash position. On September 1st, Apache Arts is expected to have a $3,000 cash balance, $135,000 of accounts receivable, and $100,000 of accounts payable. I see a typo error there. Let me correct that. Its budgeted sales, merchandise purchases, and various cash disbursements for the next 3 months follow in the table below. Now I'm going to start reading here. The budgeted September merchandise purchases includes the inventory increase. All sales are on account. Now, the company has an experience that 25% of credit sales is collected in the month of sales, 45% in the month following the sale, 20% in the second month, 9% in the third, and the remainder is uncollectible. Applying these percentages to the August credit sales, for example, shows that $81,000 of the $180,000, I need a space there, will be collected in September, $36,000 in October, and $16,200 in November. Let me ignore that error so that doesn't detract from your reading. All merchandise is purchased on credit. 80% of the balance is paid in the month following the purchase, and the remaining 20% is paid in the second month. So, for example, the $100,000 of the August purchases, $80,000 will be paid in September and $20,000 in October. Okay, so how do we go about solving this problem? I'll slide it on down. Well, we would lay out the months across the top. We would start off with our beginning balance. Then we need to determine the cash receipts. And to determine those amounts per month, we need to take a look at how we would calculate that amount. Okay? And here's how we would do it. We would compute this supporting schedule that you see in about the middle of your screen, where we drop in the months of sales and how much we expect in every month. So from August, we have the 25, the 45, the 20%, and the 9%. And then we walk this chain for everything else. For September, take 25% in the first month of September, then 45% gets us $90,000, 20% for November, and so on. Okay, so you can follow the logic, then sum on down, and you calculate the numbers that you need, which is the collections that you would expect in the various month on the credit sales. Okay, so we collect on accounts receivable. We get that total of $136,000 for the month of September. Then we would add the receipt from the bank loan, right, in the first month. Then we need to pay down the accounts payable. Well, how would we calculate that? The same thing. We follow the rules above that indicated when the credit purchases are made. 0%, 80 and 20, 0, 80 and 20. Sort of walk it, drop it in by month, right? 80% of 100,000 is 80,000, then the other 20,000. Do the same for September and October, and of course November. None of it would be paid during November because it's paid in the subsequent month. Foot those down, and we know the dollar amounts to show as the payments on account. All right. We also have to consider how much money was collected with cash payments, I believe. Okay, then we record the payroll, the rent, and the other expenses we were expecting, and that information was given in the table, right? 16, 6, and 64 for the month of September, so we would drop those in the various months. We would show the repayment of the bank loan in the last period, and then we need to calculate that interest, which is interest at 12% on $80,000 for 3 months should be $2,400. Okay, if we add up our total cash disbursements, then we can compute what the ending balance is, and we derive $34,800 as our ending balance at the end of November. Okay, I'll let you look at the supporting schedules for a minute. And now I'll page back up and we can see the entire solution. And that's how we would go about solving 23-2A. me slide back up so you can look at the information again. Thank you, everyone.